Hello viewers, welcome back to my YouTube channel. So today we are on the website of lenelden.com. So this website is to let us learn about investment strategies. So today we are going to learn about something else, a concise guide to asset allocation. So this is the most important topic in finances. Let's start. Asset allocation refers to the investment strategy of balancing risks and rewards by determining what percentage of your portfolio or net worth to put into various asset classes. For most investors, a smart approach to asset allocation is a lot more important than individual stocks selection. It's a key thing to get right and an area where a lot of investors hurt their returns. This is because selecting individual stocks that massively outperform the market is very difficult, while simply balancing your money between domestic stocks, foreign stocks, bonds, real estate, precious metals, and other asset classes help to sharply reduce risk and maintain growth through various market conditions. This one is moderately aggressive with a large asset allocation to stocks. An investor would ideally adjust it based on their age, risk tolerance, and how hands-on they want to be with their investments, as described below. Some of the categories in the example could be broken down into further subcategories. Domestic stocks could be split into large companies and small companies. Foreign stock could be divided into developed and emerging markets. Bonds could be split into government bonds and corporate bonds. This article gives you an overview of extremely simplest asset allocation methods as well as some more advanced ones. The key benefits of asset allocation basically it means portfolio diversification. The ideal goal with proper asset allocation is to maximize the risk-adjusted returns of a portfolio and tailor its growth potential and risks for an individual investor's needs and goals. Domestic and international equities, stocks historically give strong returns over long periods of time but are volatile and prone to periods of high valuations and crashes. I show this chart in a lot of articles as an example of why a combination of domestic and foreign stocks is helpful in 1990s, 2000, 2010 to 2020s. So this is the difference you can see over here. This is the US. This is okay. So this is the underdeveloped, the gray one, and this is emerging markets. Look at 1990s and look at 1920, 2020. Sorry. Basically, different regions of the world have various periods of great performance and bad performance. Sometimes one region is overvalued while other region is undervalued. Sometimes changes in currency exchange rates play a major role or against foreign equities. For passive investors holding the Vanguard Total Stock Market ETF VTI is the easiest way to get broad US stock exposure at a very low cost. For individual stock ideas, see my top 7 stocks to buy and hold, or my article on dividend stocks. For international exposure, read my guide on stocks or guide on emerging market equities. The biggest mistake I think investors make is concentrating their international holdings too much in high debt, low growth markets like Japan and Europe, and not enough in some of the more robust emerging markets or strong. developed markets. Bonds. Bonds help to reduce portfolio volatility during a stock market crash. Due to fluctuations in interest rates, they tend to be inversely correlated with stocks to some degree. As you can see, our portfolio with bonds lost less money and recovered more quickly than a pure stock portfolio during the 2008 financial crisis. The problem with bonds is in the current era is that their interest rates are so low, which makes them less ideal for an investment as they were decades ago. In fact, another way of putting it is that bonds are overvalued. Their interest rates are very low compared to historical levels of the for the various risk investors take on when they lock up their money lending to companies or governments. So this is all. Thank you so much. See you soon in the next one. Before that, subscribe my channel, press the bell icon for more updates. Bye bye. Take care.